Hello viewers, welcome to Forex Flow weekly analysis for March 2nd to 6th. Here on the screen you can see Euro USD weekly chart. Last week this small hammer was formed and we were saying that this pair has closed the gap that was there since 2017 around 107.75. That was closed last week. The price bounced from this level and it formed this hammer. And I was saying you have to take a buy position here around 107.75 to 108, and this would be a very profitable trade. And that's exactly what we have seen here. Last week the price went up 200 pips, and if you had taken this buy trade here, you should have made a lot of profit here. So with this weekly strong candle, we can say that there's a lot of buying pressure here as this pair was oversold. Here on the weekly you can see this pair, the price has been coming down for many weeks in the past. Every time the price reaches to this 50-day moving average on the weekly chart, it is rejected, as you can see here from this trend that's been going on for last few years. But here we can say that now this has formed this strong bullish candle and the price is now heading upward. Last week I gave the signal that our target was around 109.50 to 110 with extension, and the price has reached there. So if you had taken your profit around 110, that's good. If not, you can extend your profits to 110.50. It may also go up all the way here to this orange line, which is sitting at 111. If the price comes here and you see the RSI is around 80 or above 80, you can close your buy trades and then enter into a sell trade. From 111, if the price is rejected, it can dip down to 110.50 or down to 110. However, if you see the price is not able to go above here, you can certainly lock your profit. If you're not already closed your trade around 110, you can lock your profits and then let the price go down. I would say around 110. If you see the price is dipping down, you can close your buy trades and see how price reacts. It may go sideways in the coming week, so it can go like this and then may go up, can go sideways and start dipping downward. So both the possibilities are there, as we have seen that markets were crashed last week. There was huge selling pressure for Dow Jones. S&P indexes went down. So with that, the dollar is also impacted, and you may see the price of euro can go up, and also the markets how they react to the overall situation around the world. If the price start going down and it breaks below this 50-day moving average, then you can easily take a sell position, and our initial target would be 109.50 with extension to 109 initially in the coming week. That scenario is less likely. My expectation is that the price will continue to go up a little bit before it heads downward. So overall, this pair still remains in downtrend on the weekly or long-term basis, but we have these opportunities where we can trade between a certain range. Like here we were trading between 108 to 110 with extension to 111, so 200 to 300 pips range we can play, and we'll be looking for the right opportunity and enter into a buy or sell trade accordingly. There was a comment on my previous last week's video about if the price opens up with gap, then how should we react to that. So playing with the gap, if the price opens with a gap, let's say the price closed here around 110.25 and you see the price is opening up here around 140 or 150, then you can easily take your profit and close your buy trades, because the price is going to head downward and close the gap. Once the price closes the gap, then you can see the price movement. It may go up or down after that, but the gap has to be closed. So if you're a buyer and the price opens up with huge gap, then you have two options. Either you can close your trade with profit and let the price close the gap, or you can hold it and wait for the price to close the gap and see if it goes back up or not. So the other scenario is if the price opens with the gap down. So let's say the price closed here around 110.25 and it opens around this area around 110, then certainly it has to go up and close the gap again around 110.25. So in that case you can take a buy position. If you're a buyer, you can certainly wait for the price to close the gap, and then you can see if the price is going up, then you can extend your profits, or you can hold your position. However, if you're a seller around this area and the price gaps downward, then you can close your trade and take profit there. because the price is going to come back and it will close the gap. After it closes the gap, it can go either up or down. That cannot be forecasted, but overall trend here, as we discussed earlier, this shows that the price has broken above 20-day and 50-day moving averages, as well as the strong resistance around 110. So the price may dip down to 50-day EMA, and then after it can go up or down. Based on that, you can either extend your profit or you can enter into a sell trade. That's for Euro USD. Now we're looking at Pound USD. Here we were saying that we have strong support here around this green rectangle area of about 127.50 to 128, and that's what we have seen here with this selling pressure that was coming last week. The price went down. USD was very strong against pound, but on Friday we have seen a lot of profit taking happen here, so it has closed right above this rectangle area, which tells me that this trend is still intact here. As you can see, every time price comes down here, it bounces back. So in the coming week, if this trend continues, we can expect the price may rise up from here. It can go and form some candles and go up like this. We have this range and the price is moving up and down between this range for quite some time now. So expect the selling pressure as these moving averages are now heading downward. Even if the price goes up, there will be a lot of selling pressure around 130 or 129.50. If it continues to go down here and breaks this support, then you can easily take a sell trade and wait for the price to go down, because the next stop is going to be very low, and we can easily expect the price to go down here to this level, which is at 125.50 to 126. And I'm going to put this orange line here for your reference. So in case you have to enter into a sell trade, you can expect to close your sell trades around this level, 125.50, 125 to 125.50. If it breaks below this green rectangle, which is currently sitting at 127.25. In the coming week, you can expect the price to go down, as we have seen a lot of selling pressure was there, but in the first 2 days of the week, you may see price rising up a little bit before it heads downward. Now we're looking at USDCAD. Here you can see there is a clear price rejection around 134.50. Last week we were saying if the price breaks above this orange line, which was acting as resistance in the past, around 133.25, then the price may go up to 134 with extension to 134.50. That's exactly what we have seen here. Last 2 days of the week, the price was very bullish. USD was very strong against Canadian dollar, and I've been telling in my previous videos, if the price of the oil goes down, then this pair will go up and vice versa. That's exactly what we have seen. We have seen that the crude oil price went down to it broke below 45, and that's where we have seen this pair was going up. But we have seen huge profit taken here as well with this inverted hammer. This is a sign that the price is rejected around this level, so it may continue to go down a little bit around this orange line, which was a strong resistance in the past. Now it's going to act as support, and we may see another bounce here. If the oil price continues to go down, you can see you can wait for the price to come down here around this orange line around 133, and if you see the price bounces from here, then you can take your buy position here and wait for the price to go up, and it should go back up to 134.50. If it breaks above that, then it will go up with extension to 135. If it comes down here to these moving averages, again we are expecting some support around this area, and if you had entered into a sell trade, you can close your sell trades around these moving averages as they catch up with the price. If you are a buyer, you can hold your positions and wait for the price to come down here. If it does not bounce from here, you can close your trades with profit. If it bounces from here, then you can hold your positions and extend your profits. Now we're looking at gold. Here we were saying that the price may go up to 1650 all the way up to 1675 level, and that's exactly what we have seen last week, where with this huge price jump here, there was a lot of uncertainty in the market and people were investing in gold, and that's where we have seen this spike. However, with things getting better, we have seen a lot of selling happen rest of the week, and the price has come down to around 1585, and this can be a correction in the price, as it was very bullish and we have seen the price was staying, RSI was staying above 80 for a couple of weeks. But with this correction and some profit taking that happened here with the support from 50-day moving average, we can expect the price to continue to go up in the coming week. If it breaks below this moving average, then our next stop is going to be around 1500 to 1525 with this green rectangle areas there for your reference. And if you had taken a sell position, as I was telling in my previous video, if we see a sign of rejection around this level around 1700 or 1650, then we have to take a sell position, and that would be a very profitable trade. So the sellers who took a position around this level, they can close their trades if the price goes back to this moving average of 1570, and they can close their trades with profit and wait for the price action. If it bounces from here, then you can take a buy position. If it breaks below this 50-day moving average, you can extend your sell trades and wait for the price to go further down to 1525 with extension to 1500. Now we are looking at crude oil. Here we were saying the price is expected to go down. This was a very easy trade. Again, the price was heading downward. The target that was given in my last video was around $45 a barrel. That's exactly what we have seen here. So in last 2 weeks, if you look at, I gave signal around this moving average. I said if the price is rejected here, you can enter into a long-term sell trade. Our long-term target was $45 a barrel. This was a very profitable trade if you had taken a sell position and you had closed your position here. Now in the coming week, we had noticed that this price may go further down. As you can see, the RSI is just at 20 and it can go further down in the coming week due to overall situation in the market and slowdown in the economies. And this is the previous low on the weekly chart. A couple of years ago, we had this price around $43.27. That's exactly where the price is heading. If you are a holder of sell trade, you can extend your position, extend your profits, and wait for the price to dip further down to 43, even down to 42 or 40, and that's when you can close your trades. If you see the price start going back up from here or it gaps up here, certainly you want to close your sell trades and wait for the price action. After it closes the gap, it may go up or down, and based on that you can take your buy position. I would not advise anybody to enter into a sell position now because it's too late. However, the price may go further down to $42 to $40 a barrel, but that would be the area where we'll be entering into a buy trade and wait for the RSI to be below 20. That would also be a very profitable trade. So that's for the coming week. I hope everyone had a fantastic trading last week based on the forecasts that were given. With that, I'm going to close. Thank you very much for watching. Do subscribe to my channel and leave your feedback in the comment section.